Hey, welcome back to The Dive. Today on the show, we have the CEO of Riverside Resources, Jean-Marc Staude. He's going to answer some of our questions on Canada's latest CPI print, the Fed's next move, the debt ceiling debate, gold's recent price action, and he's also going to give us an update on Riverside Resources. Hey, Jean-Marc, welcome back to The Dive. Thank you so much for joining us today.
Cassandra, great to be on the show.
Okay, so Jean-Marc, let's start with the CPI number from Stats Canada yesterday. The annual inflation rate rose to 4.4% in April, the first time in 10 months. How do you think the Bank of Canada will address the rising CPI?
Yeah, I think that the rent and mortgage interest rates have helped drive up inflation higher in April. But that didn't surprise me. Canada's population has been growing so much, over 1 million new people in 2022. And that's really from immigration. And so all these people coming to Canada now are demanding housing. And so there's a huge demand on rent and on housing. And so that's creating a huge inflationary push, not from salaries, but actually from population. And so I think that the CPI in Canada overall is seeing that this big push is really simply from Trudeau's politics and from overall the push to have greater people, not that the economy is doing better. And so I think that actually the Stats Canada will hopefully understand that this is not a long-term trend and is simply a push due to the short-term implications of the April housing.
Do you think that there's a more effective way that they could determine a path forward?
I think there definitely is. And I think that if we could actually, first off, look at what is happening in the job market. Secondly, if we could really make sure and look at how are people dealing in the housing sector, because people are finding rents going up and there is inflation, but there's a lack of supply. And so there's a tightening. So I think definitely looking at housing starts and particularly also really looking at overall jobs is a critical way to do it, not necessarily as they're doing it right now with Stats Canada.
Okay, so shifting to the Fed. Some U.S. central banks are expecting interest rates to stay high or possibly increase in the future. Do you agree with this? How do you view the current data?
I'm actually an American and a Canadian, so I have a really good perspective on both. And I think particularly in the U.S., the Fed doesn't appreciate that people have so much debt and they really are struggling to manage it. So yeah, I definitely see the shifting in the interest rates higher is squeezing people big time. And also we're going into a presidential cycle. And I just do not see, I was watching last night, watching what's happening with the debt ceiling and definitely see the pinch that the US government cannot afford to keep raising interest rates. So I definitely see it topping out and potentially even softening. And I think that's really important for us as investors.
Let's talk about the debt ceiling for a minute. President Joe Biden is set to meet with House Speaker Kevin McCarthy to discuss the debt ceiling limit. Do you think that the debt ceiling negotiations matter? Is there anything that investors should be watching out for?
Oh my gosh, do they matter? And it's funny, it's a replay. It's almost like another movie like Terminator 3. It's crazy. It's like yet again, 2 years ago, we saw this happening and we see it happening again. And Kevin McCarthy representing the Republicans, pushing hard that holding off, we're not going to do it. This would make a huge crisis for the United States. They definitely have to raise the debt ceiling. If they didn't, and we lost confidence in the United States capital, that would be hugely supportive for China, hugely supportive for the globalization, and just devastating for the United States. So I definitely see this as huge. And I think the markets anticipate that it'll be resolved, but the volatility and the fear of what's happening really causes an overplay negativity. You can see it really pushing down on the market, almost like a black cloud coming over the top. So I see it as huge and watching it on the television play out. And it's funny because it's like version 2. We see this all the time. And it's just so crazy that the politicians cannot resolve themselves to get along and talk about such a political push. But yes, it'll be resolved. But I see it as a huge thing to watch out, not just a soap opera, but so important to show that the U.S. can manage itself and the government knows what to do.
What impact do you think the rising CPI numbers have on the resource sector?
The CPI numbers don't really represent what we have in the resource sector. The resource is about energy. Crushing rock, pumping oil. It's about use of that. Secondly, it really is about salaries and input costs. The CPI number overall is a basket of goods. How much milk, butter, and other things really affect you. But what we definitely see is that the CPI number, the inflation, is hitting the resource sector. So costs are going up. So that's squeezing. But also the demand is there for these commodities, particularly the electrification. So I see that there's a huge need of that. So the CPI number itself is not directly correlated, but yes, energy aspect of it is vital. And those costs are going up. So that's definitely going to cause the commodity to go up because we need the commodity. The demand is there, and it's just not profitable to produce it if we don't have higher metal prices and commodity prices going up, definitely.
Okay, so let's shift to gold. Its price dropped below $2,000. How do you view gold's trade right now?
I think it's such an opportunity. I'm buying more right now. I really cannot believe that it keeps dropping down. And it's like, guys, this is the overall debt ceiling. This is people taking money off the table, but they're forgetting that gold is fundamental. These hard assets, we're going to raise the debt ceiling. We're going to go ahead and create more debt. We're going to allow the government. So gold will respond. And so I definitely see this as a huge buying opportunity right now for gold. And I think that one of the other things is that gold is a fundamental thing. It's not going to spoil. And the other countries are trying to accumulate gold. So this is an opportunity for central banks to go ahead and add more gold to their portfolio where they've lost that gold. So I definitely see this as an anomaly down and gold going up in the short term as soon as this debt ceiling is resolved, and particularly that the United States and the world wants to have that gold as part of a basket of value to support your currency, which is definitely happening as we see a currency war happening between moving away from the United States dollar. So gold is a key aspect to that.
Okay, so let's move on and talk about Riverside. Recently, you've been focusing on Canada. What can you tell us about this, and what was the strategy here?
Canada is a giant country. It's the second largest country in the world. Myself, I grew up in the United States, but moved to live and work in Canada. Secondly, is that Canada doesn't have a large population. So you can definitely do a lot of resource development and work in areas that are somewhat remote, but we can still get there. The key thing about Canada is it has two coasts. It has an east coast and a west coast. And it has this great potential of prolific mining, strong labor law, and a very strong mineral law and consistency. It has stability. And so that for Riverside is vital. Riverside has moved into Canada strongly. We're right in the middle of the country in Ontario. And Ontario produces over 57% of all the gold in the entire country of Canada. So it's a very wealthy region, a very well-endowed region, and a great potential for more development. That's why we're working in Canada. We see great potential for growth over the next decade, currently, and into the future. And that strong ability to develop these resources and have royalties on those is vital for Riverside's future.
Now, you released your review of last year with an outlook for 2023. Could you walk us through this? And how are you going to leverage your strong balance sheet?
Exactly. First off, a strong balance sheet. Having no debt and $8 million cash is a great place to be as a junior explorer. That's over 75% of our enterprise, of our market value is just in cash. So the way we're leveraging off that and what we laid out for our 2023 is new alliances, new projects, new partnerships, expanding in Canada. So what you see is us doing that now. And you see us working on new deals. You see us working on new projects. And particularly on the gold, but also on the rare earth elements and on different type of critical elements and copper as well. Riverside has been diversifying into all these different elements that provide a great background for us. The second thing is royalties. Riverside was able to, in 2022, grab and get more royalties into the portfolio. And in 2023, we're developing more royalties using that cash to capture royalties using our database and knowledge. So that's what we're doing as we laid out in our plan.
Okay, so John Mark, what should investors look out for with Riverside short term?
I'm so excited. First off is we're lucky to have a great team. We've been operating for 16 years, and many of us are fully committed and fully working on this, and we see great potential. So in the short term, we definitely see news flow from Ontario, where we've been out in the field now flying helicopters over the surveys to look at the magnetics, doing all kinds of technical work. And what we should look for is news flow about discovery. Also diversifying further inside of Canada, new projects, other jurisdictions. We're based here, we're able to work here. So we definitely see that as a great point for Riverside. We're not burning through our cash, but we're applying our cash. So looking forward to us taking nibbles of our cash to make giant plates of opportunity. That's where Riverside is.
Sounds great. Okay, so John Mark, before we let you go here, where can our audience go to learn more about Riverside if they're interested?
Please come to our website. That's RIVRES.com. Please call us at 1-800-RIVRES. Please call us at 778-327-6671. We'd love to speak to you and find out from investors and potential shareholders about what we have going at Riverside.
Okay, great. Well, thank you so much for coming on and giving us the company update, John Mark. It's been a pleasure.
Great to be on the show with you, and all the best.
Thanks so much for watching today. If you like videos like this, consider giving our channel a follow by hitting that subscribe button below me there. Bye.